So guys, obviously, a pretty turbulent 12 months, a lot of different opinions as to where we're at in the cycle, where different parts of the property market are heading, where should people be investing. What are you guys seeing in Australia? What's your views?
Yeah, look, it's interesting at the moment. I know you invested into Brisbane. I think you've got 12 industrial assets up there at the moment, and it's definitely the right sector to be in. Industrial and logistics is really hot, both in Australia, New Zealand and globally at the moment, driven off that e-commerce boom, which COVID's just sped up dramatically. We're seeing some record pricing being paid for industrial assets in Australia. So we're now seeing assets sub 4, going towards 3.5%, which is record territory. So the investors in those Brisbane assets should be pretty happy. I think their values will be going the right way, which is great. I was reading some research recently, and they're saying there's about $45 billion of demand for industrial property sitting on the sidelines at the moment in Australia. And to put that in perspective, about 3.5 billion to 4 billion transacts every year. So there's 10 years of demand built up for industrial property. So that sector is really strong and should continue to strengthen. Office has been an interesting one with the whole working from home sentiment. There has been a lot of negative press about it. Probably in the last couple of months that's turned. What we've seen is the market start to normalise. A lot of big groups have sent their staff back. You saw a lot of the big offshore groups like Google and Amazon more recently tell the market that their staff needed to get back into the office. It's something that we thought would happen. We did think it would normalise. Most businesses can't have their staff working from home and have full productivity. So that is definitely normalising. You're seeing a lot of office transactions at the moment in Australia at book value or above. So you're seeing a lot of demand for office now coming back into the market after about 9 months of not a lot happening. So it's good to see the office markets returning to normal as well, and some pretty big prices getting paid for assets, which is great. Neighbourhood retail strong, which you'd expect. Healthcare, which is something that you've been investing into New Zealand more recently, and we have a lot of it in Australia, is extremely strong as well. So we're seeing record pricing for healthcare as well as investors are attracted to high quality operators on long-term leases. So really the negative part of the market is probably the larger retail assets, the regional and what we call sub-regional over here. There's still not a lot of demand there and there's not many transactions happening, but all the other sectors are actually trading very strongly.
And I think a lot of that's underpinned the view of the economy over here for the next 2 to 3 years. There'll be a very, very strong recovery of demand. And, COVID-19 was a very serious issue, but, it was a 2 to 3 year issue. And as real estate investors, our job is to husband our investors' capital. And in real estate, we have 7, 8, 9, 10, 15-year views, not 1 or 2 year views. And, we've got a very good office portfolio in both countries. They're high quality buildings with excellent tenants. Yes, we know there's been a little bit of disruption, particularly lower quality assets, but, we see through it and past it. And I think there's very good potential for us to, over the forthcoming years, with the economies in both countries going well, to for further investment in that area.
Yeah, well said. And I think similar themes here in New Zealand. I think we're both in the best countries you could possibly be in the world right now, aren't we? So
correct.
Very grateful for that.